Investing can feel like chasing a moving target, up one day, crashing the next. But what if I told you there's a way to lock in stable, growing income without the wild ride? Forget complicated strategies. In this video, you'll discover 6 REITs that could pay you for life, even while you sleep. Ready to make money work for you? Let's dive straight in. First up on our list is CubeSmart, a hidden giant fueling America's need for space. Think about it. No matter what's happening in the economy, people always need more space. Moving, downsizing, remodeling, business storage, it never ends. CubeSmart taps into that endless demand, operating one of the largest networks of storage facilities across the country. Right now, CubeSmart offers a dividend yield of 3.96%, better than many traditional income investments. But what truly makes it shine is its 14.98% dividend growth rate. That's powerful because it means your payout isn't just consistent, it's growing faster than inflation, putting more money in your pocket every year. It gets even better. CubeSmart's average share price appreciation is 10.64%, meaning your investment is likely to grow in value alongside your dividend checks. Let's break down the potential. Invest $10,000 today, and after 1 year, it could grow to $11,460. In 10 years, that investment could become $42,134. After 20 years, you might be looking at $229,950. And after 30 years, you could be sitting on a staggering $1,647,400. And the dividends? After 30 years, you could be collecting $175,300 per year, or about $14,600 every single month. That's more than many people's full-time salaries earned passively. So why is CubeSmart a no-brainer for long-term investors? First, storage demand is surprisingly recession-resistant. People still move, store, and downsize even during downturns. Second, CubeSmart's aggressive reinvestment strategy allows it to expand smartly without piling on dangerous debt. Third, their operational efficiency gives them pricing power, meaning they can raise rental rates without losing customers. If you're building a portfolio designed to pay you steadily, CubeSmart offers the rare blend of security, growth, and inflation-beating income. Investing is about finding assets you can trust for decades, not just a few quarters. CubeSmart fits that mold perfectly. And here's the kicker. If you think CubeSmart's numbers are impressive, the next REIT on our list has an even higher dividend growth rate, and it's still in the booming self-storage sector. Coming in strong at number 2 is Extra Space Storage, another titan in the self-storage space, and arguably even more dominant than CubeSmart. Extra Space Storage isn't just big, it's strategic. With over 2,000 locations across the United States, EXR is a massive force in the self-storage sector, consistently acquiring prime properties and optimizing their operations to maximize returns. EXR currently offers a dividend yield of 3.64%, making it an attractive choice for income-focused investors. But where Extra Space really flexes its muscles is in dividend growth, a stunning 14.52% annual increase. Translation? Your payouts don't just keep coming, they snowball. On top of that, EXR boasts an average share price appreciation of 12.97%, giving you the best of both worlds, steady income and serious long-term capital gains. Let's see what that looks like if you invested $10,000 today. After 1 year, your investment could grow to around $11,661. In 10 years, it could become about $70,555. After 20 years, it could balloon to around $239,300. And in 30 years, your $10,000 investment could potentially explode to $1,281,049. But it doesn't end there. Thanks to dividend reinvestment and compounding, your annual dividend income after 30 years could reach around $61,900, giving you a monthly income of about $5,151 just for holding your shares. So why should Extra Space Storage grab your attention? First, self-storage is a surprisingly resilient business model. Whether the economy is booming or slumping, people always need a place for their stuff. Second, EXR's aggressive yet smart expansion strategy through mergers and acquisitions helps them continually widen their market share. Third, their operational efficiency is top tier. They consistently achieve higher occupancy rates and rental growth compared to competitors. In short, Extra Space isn't just a safe haven for your cash, it's a growth engine. If you want an investment that fights inflation, grows faster than the market, and pays you along the way, Extra Space Storage absolutely deserves a place in your portfolio. But up next, we're leaving storage behind and heading into a whole new world, one where your investments power the very infrastructure of global communication. Shifting gears now, let's talk about American Tower Corporation, a REIT that owns something you use every single day, without even thinking about it. American Tower is the king of wireless communication infrastructure. They own and operate tens of thousands of cell towers, not just in the United States, but globally across 5 continents. As 5G, mobile internet, and cloud computing continue to grow, the demand for American Tower's infrastructure is only exploding higher. Right now, AMT offers a dividend yield of 2.85%, a bit lower than traditional REITs, but don't be fooled. The real magic is in its 15.22% annual dividend growth rate, one of the highest among REITs. Plus, its average share price appreciation sits at 8.66%, giving investors a powerful combination of income today and serious growth tomorrow. Let's run the numbers. A $10,000 investment today could be worth around $11,151 after 1 year. After 10 years, it could grow to approximately $32,500. In 20 years, your investment could reach around $142,600. After 30 years, your AMT holdings could skyrocket to about $1,745,000. And here's the kicker. After 30 years, your annual dividend income could reach around $152,600. That's roughly $12,720 per month, purely passive. So why is American Tower such a powerhouse for long-term investors? First, wireless data usage is growing exponentially. More smartphones, more apps, more devices, all mean more demand for tower infrastructure. Second, AMT operates under long-term lease agreements, often 10 to 15 years in length, with built-in rent escalators. This means predictable, growing cash flow for years to come. Third, their global expansion strategy diversifies their revenue streams, making them less dependent on any single economy or market. Investing in American Tower means investing in the backbone of the future: 5G, Internet of Things, and global mobile connectivity. While many companies battle economic cycles, AMT quietly collects rent from telecom giants like Verizon, AT&T, and T-Mobile, rain or shine. And as mobile data demand continues its unstoppable climb, American Tower stands ready to capture that growth and reward its shareholders handsomely. But speaking of capturing growth, our next REIT specializes in something a little different: industrial real estate in one of the most supply-constrained markets in the entire country. Next on our list is Rexford Industrial Realty, a REIT that's quietly dominating one of the tightest and most valuable real estate markets in the world. Rexford specializes in industrial properties across Southern California, a region where land is scarce, demand is sky-high, and opportunities for new development are extremely limited. Their focus is strategic, buying, upgrading, and managing industrial properties located near major ports, airports, and urban centers. Think warehouses, logistics hubs, and distribution centers, the critical backbone of the supply chain. REXR currently offers a dividend yield of 3.21%, which might seem modest at first glance. But the real magic happens when you look at their dividend growth rate of 13.49% and their average share price appreciation of 13.56%. It's the perfect combination: strong income today with serious appreciation potential tomorrow. Here's what your returns could look like. A $10,000 investment today could grow to around $11,677 after just 1 year. After 10 years, your investment could reach approximately $47,900. Fast forward to 20 years, and you're looking at about $221,300. After 30 years, that initial $10,000 could transform into a whopping $1,283,900. And your dividends? After 30 years, your annual dividend income could be around $27,988, or roughly $2,332 every month, completely passive. So why is Rexford a standout? First, industrial real estate in Southern California is incredibly supply constrained. Simply put, they're not making any more land, and companies need space more than ever due to e-commerce and last-mile delivery demands. Second, Rexford has a proven strategy of value-add acquisitions. They buy underperforming properties, upgrade them, and then charge premium rents. Third, their customer base is extremely diversified, ranging from small businesses to Fortune 500 companies, which spreads out their risk. In short, Rexford Industrial Realty offers investors a front-row seat to one of the strongest secular trends out there: the explosion of industrial real estate demand. And best of all, their localized focus gives them an edge that national REITs simply can't match. But if you thought industrial properties were impressive, wait until you meet our next REIT, a company that's mastering the art of steady, low-risk returns through single-tenant net lease properties. Coming in at number 5, we have Essential Properties Realty Trust, a newer player on the scene, but one that's quickly becoming a standout in the REIT world. EPRT focuses on single-tenant, net-leased properties, meaning they rent out properties to businesses, and those tenants handle most of the property expenses like taxes, insurance, and maintenance. That setup makes EPRT's income stream incredibly stable and predictable, exactly what you want in a long-term investment. EPRT currently offers a dividend yield of 3.67%, providing a solid return right out of the gate. But here's where it gets exciting. Their dividend growth rate is 5.7%, and their average share price appreciation clocks in at 15.8%, one of the highest growth rates among REITs in this class. Now let's see what that could mean for your portfolio. A $10,000 investment today could grow to approximately $11,885 after 1 year. After 10 years, it could reach around $50,605. In 20 years, your investment could swell to about $225,100. And after 30 years, it could potentially soar to around $952,500. And the dividends? After 30 years, you could be earning around $61,686 annually. That's over $5,100 a month just by holding onto your shares. So why should Essential Properties Realty Trust earn a place in your portfolio? First, their tenant base is highly diversified across industries, from restaurants and healthcare to industrial and retail, reducing reliance on any single sector. Second, because EPRT structures its leases as triple net leases, operating costs are incredibly low, and cash flow is more reliable compared to traditional property managers. Third, their disciplined acquisition strategy focuses on buying properties from established recession-resistant businesses, giving them a natural defense against economic downturns. In short, EPRT gives investors access to a high-growth, low-maintenance, and steady cash-flowing portfolio of real estate assets. It's a perfect example of set-it-and-forget-it investing. All you need is patience and time to watch your wealth grow. But if you thought EPRT was impressive, wait until you see the final REIT on our list, a company that combines income stability with essential retail tenants, making it a must-watch for defensive long-term investors. Wrapping up our list is Agree Realty Corporation, a company that takes essential to the next level. ADC specializes in net leased retail properties leased to some of the most recession-proof businesses in America. Think Walmart, Dollar General, Tractor Supply, AutoZone, companies that stay strong no matter what's happening in the economy. ADC's business model is simple, but powerful. Buy high-quality properties, lease them out on long-term contracts, and collect predictable cash flow while shareholders enjoy steady, growing dividends. Today, ADC offers a dividend yield of 4.12%, one of the higher yields on our list, and it's backed by a consistent dividend growth rate of 5.86%. Their average share price appreciation also impresses at 9.46%, giving you the perfect combination of income plus capital growth. Let's look at the numbers. A $10,000 investment today could grow to about $11,358 after 1 year. After 10 years, you could be looking at approximately $33,860. In 20 years, your investment might reach around $141,000. And after 30 years, ADC could help you build a portfolio worth nearly $299,700. And your passive income? After 30 years, your annual dividend payout could be about $38,460, or more than $3,200 every month. So why is Agree Realty Corporation such a rock-solid choice? First, their focus on essential retailers gives them a built-in defense against economic downturns. People keep shopping for essentials, rain or shine. Second, their net lease structure means tenants are responsible for most property costs, lowering ADC's operational risk and boosting profitability. Third, ADC's conservative management team keeps debt low and acquisition strategies disciplined, critical traits for surviving and thriving through economic cycles. In short, Agree Realty gives you the best of both worlds, strong, dependable cash flow today and steady portfolio growth for the future. It's an ideal cornerstone investment for anyone serious about building lasting wealth. And that wraps up our list of 6 powerful REITs built for the long haul, offering a mix of security, passive income, and serious growth potential. Which REIT are you most excited about adding to your portfolio? Let us know in the comments. If you're serious about building real wealth, don't miss our next Video 7 Money Mindsets that break you out of the rat race. And if you found this video helpful, make sure to like, subscribe, and hit that notification bell so you never miss a way to make your money work harder for you.